So we did edge above yesterday's all-time high on the S&P and the Nas. Let's get to Bob Pisani. Good morning, Bob.
Good morning, Carl. Happy Wednesday, everybody. A new high on the S&P, just barely again, but fairly mixed open, about even on the advanced decline line, and not a lot of clear direction in terms of the sectors. Remember, the market leaders this month remain technology, industrials doing well, banks lagging, energy lagging as well. But you see here sort of a mixed open here. Healthcare banks modestly on the upside, energy down. Retail, which has had a decent month overall, just modestly to the upside. I've often said there's two different economies out there, or it seems that way, doesn't it? There seems to be the digital economy where goods and buying is shifting online. And then there's everything else. Boy, talk about this digital economy. You can see this with the digital sales for the big retailers. Look at these numbers with Target up 195% for digital sales, Lowe's 135%, Walmart, that was yesterday, up 97%. These are amazing numbers and are really helping power the overall comp store sales forward here. But despite all these good numbers here, Target was similar to other companies, pointing to some slight decelerating numbers, similar to what Kohl's, Walmart were pointing to yesterday. Look, Brian was on this morning, Brian Cornell, saying May was up 30%, June and July was up 20%. August is up in the low to mid-teens. So, yes, good numbers, pent-up demand early in May, obviously, but still somewhat decelerating. And TJX, which we don't talk about a lot, also said something very similar this morning in their numbers. They had strong initial sales in the second quarter. If you put up TJX's numbers, strong initial sales, but then traffic and sales moderated, and that's their term they used in the press release, through the second quarter. And now their estimates for Q3 sales, this is just for stores that are open, down 10 to 20%. And they also, like Kohl's, talked about the slower back-to-school selling season. So these things these issues are not going away here with the back-to-school numbers. So on the retailers here, you see Lowe's, that's a new high. We see Target, that's a new high as well for Target. TJX, of course, down here, suffering a little bit from, I guess, the Kohl's syndrome that they had yesterday here. As for where we go from here, we have new highs. I think the issue might be the U.S., how long can the spending spree continue without the stimulus checks is a major issue. But new highs here. I noted yesterday we only had 25 new highs on the S&P. That's like 5%. That's not great. And we have less than that today. So we're at new highs without a lot of new highs. That's because the big mega cap names are sitting right near new highs, and they're pushing the index to the upside. Broader rally needs more new highs. We don't have that yet. What's next for the markets? Well, it is fairly typical to have a modest pullback after a new high. So if you see something, 4, 5, 6%, nobody would be surprised to see that. I would pay a lot of attention to these back-to-school warnings. They seem to be resonating with a lot of investors. As for where the money is, I don't care what anybody says. There is no big, massive exodus out of technology into value stocks. You look at the volume. It's not happening. You'll get mini rallies, yes, for a few days in banks, for a few days in industrials, for a few days in energy, and it doesn't last. We've had 3, 4 of them in the last 3 months or so, and none of them have any real staying power. So I'm sticking with big money, is staying with technology. As for what the next catalyst is, if you look at the VIX futures, there is a big spike in the next 2 months around the elections. The VIX October futures, October ending futures contract is almost at 30 right now. That indicates that the market's very nervous about the election and the possible outcomes around that election. So if you're looking for a catalyst, the market is telling you that it's the election that's likely to be the most volatile next event for the overall market.